Hello and welcome to a very special edition of Indianomics. I'm Latha Venkatesh. The just announced minutes of the Monetary Policy Committee show that all members have voted for a cut because of the decisive fall in inflation and some worries over growth. On the stance, the highlight is that both Governor Sanjay Malhotra and RBI member Rajiv Ranjan seem to be at pains to point out that the move to neutral does not necessarily signify a change in the rate-cutting cycle. They seem to hint it is more a pause. The governor in particular says that a neutral stance can mean a hike or a cut, and Rajiv Ranjan saying that the neutral stance was adhered to because a 50 bips cut and an accommodative stance may have misled the financial markets to expect too much dovishness. So they seem to be hedging their position. However, one person who had always been rooting for a 50 basis cut, even in the April policy, was external member Dr. Nagesh Kumar. Dr. Kumar joins me now with his perspective. Dr. Kumar, thank you very much indeed for finding time for us. I want, everybody has expressed some reservations of growth and confidence in inflation falling. But you have been particularly worried about growth. You think that 6.5 itself may be difficult under current circumstances?
Yeah, well, actually, the point I have tried to make is that the external conditions, external environment has become highly uncertain and difficult and challenging. Very uncertain times, and private investments have been subdued. The consumption, urban consumption especially, has also been subdued. So we needed to support growth. And when you try to support growth through monetary policy, you need also the policy space. And fortunately, the inflationary outlook has turned very benign. The numbers that we had before us showed that the headline inflation had gone down to 3.16 or 18, which was lowest we have seen in last 69 months or so. So that provided the headroom. And my view, which I expressed in April also, was that if we can, we should do front loading of rate cutting, because I believe that 50 basis points at one go will be more effective than two bouts of 25 basis points coming one after the other. Yeah. Because the magnitude of the cut will force the bankers to lower the deposit and lending rate, which is the purpose of rate.
Now, I take your point, sir. It appears to have even had its impact because we hear a lot of home loans falling even below 8%, certain tenors. So perhaps some of the impact is already there. Would you believe that we got the core sector numbers, and that is a little abysmal. We've got a 0.7% core sector growth for May. So it does look like growth can be, not as strong. Your fears may be realized. So do you think there is more scope to cut if growth were to continue with such numbers?
Well, as the governor explained in his interview recently after the MPC, it all depends upon the numbers. So when we have the numbers before us and the inflation continues to remain benign, goes down further, it may be possible to take a call on the further cuts. So it is not, as the governor has said, that it doesn't mean anything that the stance has been changed. It really depends upon what numbers we get on the growth side and on the inflation side. And on that basis, there may be more policy space. If we look at the inflation numbers for May, which have just come in, are pointing to 2.8
Yes.
percent, which is lowest we have seen in 75 months. So,
Yes.
so we don't know what the June numbers would look
Mm.
like, and so there may be more space for
Okay.
cuts if
Okay.
this trend continues, and if we feel the need to support growth is more than what we anticipated.
Okay. So actually, you're right that the May inflation has come in even lower than the market expectation, but it seems to be more or less RBI's expectation because their average is 2.9 for the 3 months. And now with 2 months, we have got 3%. So probably, it's going to not undershoot what Reserve Bank says. But the governor is at pains to point out in his statement that we don't just look at the inflation number before us, but we also have to look at the inflation outlook. And that is over 4%, 4.4 for the fourth quarter. And if you go by the monetary policy report, which came in April, the next year as well, there is a +4, FY27. So will that be a very big consideration not to move ahead on further cuts?
Yeah. No, as I said, I think there's a lot of uncertainty at this moment about the inflation outlook. The June meeting took place on around 4th, 5th,
Yes.
6th of June. And since then, a lot had changed. For instance, the oil prices. We at that time were sitting with very comfortable figure of $65 to a barrel type of oil prices. But now, with the Iran-Israel conflict, oil prices have moved up across 80, and we do not know what would it look like 2 months down the line.
Okay.
So there's a lot of uncertainties, and one has to really keep an eye on all of these things, how they are playing out, and then growth, of course. How the global situation impacts India's growth story, and ultimately we need to have good growth also. So while managing inflationary up.
Okay. Yeah, I take your point that crude is giving us some jitters, but it hasn't crossed 80 so far. So perhaps, the worst is over. Dr. Kumar, one thing intrigued me. None of the external members have argued much about the stance. All of you have dismissed it in one line. I mean, you have said, after an exhaustive argument about rates, you say, hence I vote for a 50 basis rate cut, a repo rate to 5.5. I also suggest a shift in stance. And I noticed the same thing even with Dr. Ram Singh, who merely says that given the global circumstances, I vote for a neutral stance. Saugata's entire minutes are brief. Was the stance not discussed?
Yeah, well, actually, first of all, stance is not in the purview of MPC, but we do make our observations. And the view at that time was that since we have delivered a very sort of double dose kind of policy action, obviously the policy space is getting squeezed. Keeping in mind the existing inflation numbers, which
Yes.
can change. So let there be a sort of, management of expectations that you don't expect that it will continue to go down. There is, after all, a limit. You need to have a balance between the savings, incentive to savings, and the promotion of investments with the cost of funds, cost of investments
Yes.
by interest rates. So you need to have certain positive real rate of interest, so that the incentive to saving is not jeopardized.
Okay.
And so this kind of the stance which gives flexibility to move either way. And as I said earlier, things are very fluid and changing on day-to-day basis. Like now, I am not so confident as we were earlier about the inflation remaining in a very good, benign zone for long time. Because if oil prices continue the way they have moved up in the last week or so, one has to be really cautiously watching how the things evolve.
Okay. Sir, it's a long time since I heard someone speak about the saver like you have. I think I last heard Dr. Rangarajan at a CNBC event putting out his point that, we have to think of the savers and the savers' incentive. The real rate cannot be wished away. That's a very welcome observation, sir. I just wanted a final thought on, whether how worried are you about the global situation? In your personal career, your expertise is in the global situation and on trade matters. Are you foreseeing that because we have moved away from that April 2nd regulatory regime to a point where, the courts have stalled the US president and there is a chance of some agreement, do you think we are better off, or do you think this year is a washout in terms of global investments?
Yeah, I think it's a very big question in everybody's mind. It's very difficult to know what the future will look like. But one thing is very clear, that it is a mixed bag for us. On the one hand, if the July 9 deadline for pause of the Trump tariffs is lifted, and we are in the real world with facing these reciprocal tariffs of, say, 26% on India, which seems a little bit lower than some of our peers, like 55% in China. So we may feel that we have a little bit of an advantage, and that might help India to attract the China plus one type of investments or the supply chain restructuring. But on the other hand, the fact that some of the goods that China was exporting to United States and the other advanced economy and will not be able to export that anymore, or will be finding it difficult, those goods and may be hurting our competitiveness in other markets besides our domestic market. So it's a very kind of a mixed bag, and one has to really wait and watch how we are able to steer our path forward and not be too much affected by what is going around.
Okay. Yeah, we have to wait and see. It's a very, very moving piece. And for all you know, before the weekend is out, all the pieces would have moved. Thank you very much, Dr. Kumar, for sparing time in what's a very, very busy day for you. Thank you for throwing more light on understanding the economy. Well, that's the word coming in from one member. After the break, we are going to be joined by another MPC member, Professor Ram Singh of JNU, to give us his views on why he voted the way he voted.